As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Welcome to Stocksnipertrading. In today's tutorial, we will be going over the simple moving average, and these are main chart indicators. An SMA, which is a simple moving average, can be found on any platform, trading platform, and you can select which time period you're looking to trade. For example, there is a 20 SMA, a 50 SMA, 100 SMA, and these are just a few of the particular examples. You can also have 200-day SMA or a 5-day SMA, and you can pick which time frame you'd like to select for your trading. The longer the time frame, the more smooth the average will be, and the shorter the moving average, the more volatile it will be. Many technical analysts use a simple moving average, the SMA, in their charts to simplify price data by smoothing it out and creating a simple line, which makes seeing the trend easier. This moving average can be illustrated over a specific period of time, such as 30 days or 100 days, and can be used by both short-term traders and long-term investors. Moving averages can also be used to identify support and resistance areas in their charts. Furthermore, traders look for stock prices or forex prices to cross over these moving averages to identify trend directions and entries and exits. For example, in an uptrend, the 50-day or 100-day moving average may act as a support level or a floor, where the price bounces off of it and continues upward. However, if the price crosses below the moving average and establishes a downtrend, the moving average is now the resistance level. Moving averages also have drawbacks, as they are a lagging indicator and use historical data. Therefore, they may cause false signals. On the left here, we have an example of our price candlesticks. You can see that the red ones are bearish, green ones are bullish, and we have a few different simple moving averages. The blue line in the middle is your 50-day SMA. The yellow line at the top is our 20-day SMA, and the green line at the bottom is a 100-day SMA. And you can see with these moving averages, the 100-day is more of a higher time frame moving average, and you can see it's basically moving parallel with the price and not showing any real direction because it's more of a longer time frame. The blue 50 SMA is actually, you can see it moving up and then you can see it moving down, and you can see when the price is above the moving averages, it is bullish. When the price action is below these moving averages, they are bearish. And then you can see with the yellow line, the 20 SMA, that when you get that it moves a little bit faster. You can see how it moves up and it comes down faster, and then it curls and starts to go up again. This is because it's shorter and it's got more volatility, and you can see the price action as well. When it's above the yellow line, it's bullish. When it's below the yellow line is bearish. So it's up to you to select which SMA you'd like to use for your trading style. And just to read the bullet points on the side on the right, SMA is our technical indicator, which is one of our main chart indicators we can select on all of our trading platforms. And it simplifies price data by smoothing it out and creating a simple line. It helps identify bullish and bearish trends with crossovers. It helps identify support and resistance areas. If price action is above a simple moving average, it will act as a support. If price action is below a simple moving average, it will use it as a resistance. You can select multiple different lengths. It's a lagging indicator. It's used on higher time frames, and it helps avoid erratic price action because it is more smooth. So this is an example of a simple moving average, SMA, from our TradingView charts. And in this particular example, we are on the Euro GBP, and we are on the 60-minute time frame where each individual candlestick is 1 hour to form. And you can see that we have selected the yellow line, which is our 10-day SMA, and we also have the blue line, which is a 50-day SMA. And you can see when the yellow line crosses below the blue line, we have a bearish crossover, signaling a downtrend, where our shorter SMA crosses a higher time frame SMA. The 10 crosses below the 50. This causes a bearish downtrend when we have a bearish crossover, and eventually price will reach a level of support where buyers will come into the market and start pushing the price up. And now we can start see on the bottom of our screen, we can start seeing bullish candles starting to close above the yellow line as buyers come into the market. And then we have a bullish crossover signaling an uptrend where we have the yellow line cross above the blue line. This is where the 10 SMA is crossing above the 50 SMA. Our shorter time frame moving average is now crossing over our higher time frame moving average. We get a bullish crossover, and price action continues to go up where it begins to consolidate for its next move. So here we can see the yellow line, we have price action above it. And now when price action starts to go below the yellow line, we can start getting into a bearish momentum. Now we're approaching the red moving average, which is more of a higher time frame. And when we get the crossover, so right there, we start to get price action going below the yellow and the red line. Now when the yellow line crosses below the red line, we should get some bearish momentum. So there was our first crossover from where we were bullish and now we're going bearish. And now you can see we got a big red candlestick coming right at the crossover, because this is now the shorter time frame moving average is crossing below the higher time frame moving average. The 10-day is crossing below the 50-day, and price action is going bearish. And now price action hit a bottom support where buyers came into the market. And now price action is going above the yellow line again, which is showing some bullish strength. And maybe we will see the yellow line cross above the red line, and then it will get its bullish momentum again. However, price action can come now up to the red line, which is our 50-day, and maybe use it as a support and get rejected and continue going bearish. So we didn't get a retest at the 50 at the red line, and price action continued to go below our lower time frame simple moving average. And now we're getting real bearish momentum, and you can see all the red bearish candles. After some bearish momentum, and we reached levels of support, we had some buying momentum near the bottom where we got price action above the yellow line again, and now we're approaching the red moving average, and we're about to get a crossover, which will be a bullish crossover where the yellow line will cross above the red line, and we should get some bullish momentum as price action continues to go in an upward direction. Price action goes upward for a short period of time where we have price action coming down again, and now we're entering an area of consolidation where price action is in between the 10 and the 50, and we can continue this and look for crossovers where they use this as support and resistance. And remember, moving averages are lagging indicators. They print after a candlestick has formed. So your technical analysis and your candlestick analysis is always real-time price action, and you can use these type of technical indicators to help you see crossovers or when price action is bullish or bearish. Quick recap. The simple moving average, the SMA, is a technical indicator. You can select it and it will appear on your main chart with your price action candlesticks. It simplifies price data by smoothing it out and creating a simple line. It helps identify bullish and bearish trends. It helps identify support and resistance areas. You can select multiple different lengths. It's a lagging indicator which uses historical data. It's used on higher time frames, and it helps avoid erratic price action. We hope you enjoyed this tutorial on the SMA, the simple moving average, and on our next tutorial we will introduce the EMA, the exponential moving average.